How are transfer taxes calculated? Have you ever wondered how transfer taxes are calculated when buying a home? Understanding this can help you navigate the closing process more smoothly. Transfer taxes are fees that state or local governments charge when real estate changes ownership. The calculation of these taxes typically depends on the sale price or fair market value of the property and the specific tax rate set by the local jurisdiction. To start, you need to identify the sale price or fair market value of the property. This figure serves as the basis for the tax calculation. Next, you will determine the applicable transfer tax rates. These rates can vary widely depending on your state, county, or city. They may be a flat percentage, a tiered percentage based on value brackets, or a fixed amount for each increment of value. Once you have the sale price and the tax rate, you can apply the tax rate to the sale price. For example, if the transfer tax rate is 1% and the property sells for $300,000, the transfer tax would amount to $3,000. It is also important to account for any additional local transfer taxes that may apply. Many jurisdictions impose extra taxes at the county or city level, which can be added to the state rate. Additionally, you should consider any exemptions or reduced rates that might apply. For instance, transfers between family members or first-time homebuyers may qualify for lower rates. Some places, like Michigan, calculate transfer taxes in increments of property value. In Michigan, the state charges $3.75 for every $500 of property value, plus an additional county tax that varies based on population. This means you divide the sale price into $500 increments and multiply by the rate per increment. In Maine, the transfer tax is $2.20 for each $500 or fraction thereof, and this amount is typically split equally between the buyer and seller. Who pays the transfer tax can vary. Often, the seller is responsible for this fee unless the buyer and seller negotiate otherwise in the purchase agreement. From the perspective of real estate investing, knowing how transfer taxes are calculated is essential for estimating closing costs and overall investment expenses. These taxes can impact the net proceeds from a sale or add to the acquisition cost, which in turn affects investment returns. Before purchasing or selling property, investors should research local transfer tax rates and rules. This knowledge can help you factor these costs into your financial analysis. In summary, transfer taxes are calculated by applying the specific rate or rates from your jurisdiction to the property's sale price or value. Understanding this calculation is an important part of the closing process in real estate transactions.